Hey guys, it's me Mabani Kolusula, Forex Academy. I will be making this video just to keep you in mind, just to highlight you with some things that I've been going through and things that I've been studying in my Forex journey. Please subscribe to my channel and also like and also comment below. I will reply back to you. On this video, I would like us to go through the 7th oath about money that the banks don't want you to know. I've realized this with time, through my Forex trading, through the time that I've spent in the market, and the experience have made me to go into reality and see the market behaving in a reality way. One of the things that the banks won't tell you is that you'll be losing your money every day. The banks also earn from your card transactions, and also your money in the bank is not physical. That's one of the things that you need to know. And bankers are not your friends. Foreign transaction fees are way high. Always check your accounts and you will realize that you are being washed. You know what they do? Every day they take your money and use it to somebody else. They take your money and give it to someone else. What I'm going to show you today is how the market take your money and give it to someone else. The banks earn from your card transactions. You pay the broker, that's the transaction. You fund your account, that's one of the transactions. Your money in your trading account is not yours until you withdraw it, until it's in your hands. And if it was $1,000, you won't get it as $1,000 when you withdraw it. That's where I say the transaction fees are way high. The bankers are not your friends. They won't advise you not to bank with them. They will rip you off. They are going to take all the money that you have, and they are watching you. That's why they are calling you. That's why they asking you to pay your debts. That's why they are calling you to remind you about your debts. That's why they are calling you to act as if they are assisting you to get over your debts. With this video, I'll be investigating a crime scene, a way how we are chained in money. The Forex market has that little secret that I want us to go through. Trying to explain what is crime scene. A crime scene is any location that may be associated with a committed crime crime scene contains physical evidence that is permitted to a criminal investigation. The evidence is collected by the crime scene investigators and law enforcement, same as the market. It always leaves footprints as the location that may be associated with a crime committed becomes the market reaction or algorithm. Crime scene contains physical evidence that is pertinent to a crime investigation. As much as the market creates highs and lows, buy and sell opportunities, this evidence is collected by the crime scene investigators and law enforcement. In this case, in Forex, there are fundamentals and technical analysis who investigates the footprints in the market. With the court reports, we realize the footprints that the market always creates. When you see the percentage of longs and shorts, you'll see the reaction of the market, where the banks will increase the money so that the market can move up and down or create highs and lows, inducing buyers and sellers. In reality, they will give you double bottom and you will realize that the market is going to go higher, but they are just inducing you to take longs, whereas they know where they are taking the market. I'll be using this court reports as the reflection of how the market has been fooling people with time. With this video, I'll be taking you through how we end up losing money. I have been sharing all my analysis previously in different channels, even on my paid channel, on my channel that I was part of, and I once became an admin. I've been sharing the experience of how I've been trading with time, and one of the pairs that I've been sharing most is EURUSD, and I'll be taking you through. I want you to look into something that I once shared. This was one of my swing trades on EURUSD, and if the market has to come to this point, they won't just move in a straight line to come to this point, but what they will do, they will give you a W shape, and then they will increase the volatility of the market and also induce the sellers to sell into this market. And then once they do that, they will kill all those who are selling and using their stops around the zones, and then they will move away from those positions. And doing that, if you take into consideration this chart is made of a weekly time frame, and you can imagine how many weeks that they have used into accumulating this behavior. Then before they reach this point. Now, same scenario comes into play. If the market has to come to this point, what they must do, they have to create those inducing points like this one, and then we will see how the market created one of those moves into a way to get into this point. Now let's go on. These are one of the trades that I've been taking from the previous months, and then from the previous chart that I was sharing, this is what I was expecting, and let's see how the market reacted. It definitely gave us that reaction. And what are we looking for? We are looking for the market to give us this area. But since we know that the market has to come to this point, what they should do, they should pause. Let's make an example. If you move into a road, a main road, let's say a highway, and you are in a full speed, if you come across a roadblock, you should stop and accumulate another speed so that you could continue with your movement. And this is what we are expecting, meaning here we had a roadblock, so the market has to go back and test the previous support or the order block in different time frames. And then by doing that, this is what happens. We know that the market has to come to the zone, but we have a good resistance line here where the market might also go back to test. And by doing that, I always take the trade in those situations. This is how the market always behaves, guys. This is what I have been explaining. But since we know that the market hasn't taken out to this point, and already now they are they are distributing the market to take out the zone as they did here. Now we have this triple bottom where most of the people will start to buy this market, but we know that the market has to come to this zone, and with time, this is what we are looking for. Remember, we had this chart previously on the weekly time frame, and I also told you how the market will be using the zones. And then if we have to make analysis on this pair, this is what I'm looking for, and the market has already given us that reaction. And then this are the footprints that I'm leaving on my chart. This is how I'm investigating this chart, guys. I'll be only taking you through this pair, and then I will also do others when I come from work. I'll be going to work later today. This is how I identify the footprints in the market. and then this is how I create my swing high. And then what do I look for? I look for areas where the market might retraces at, being identified as flip zones, and then this pair also works as flip zone. We could have taken a trade in the zone, but since we are bearish on this pair, I will also share why I'm saying that we are bearish on this pair. The market hasn't tested the 50% of this candle, and I'm expecting the market to test the 50% of that candle with this behavior. This is what I'll be looking for, guys, on your USD short position. This is what I'll be looking for. And we have this order block that made the market to go back to this trading zone. Once we see the market break in this area, they will be targeting these lows. We already have a broken to market structure, and then also the market hasn't broken this high. This is why I'm expecting this bearish move. Why I'm saying that is, remember I showed you this. Let me EURUSD. Now I'm showing you why I'm saying we are bearish on EURUSD. The only way to know that we are bearish on EURUSD is this. Look at the US dollar, being the dollar index. On the previous week, the week of 31st of August, the month end, we had the highest longs that the market injected into the longs, and then we also had 15Ks of shorts, and then based on the percentages, we had the highest longs, and then the 30% in the shorts. Now on the previous week, if we go to look into this market, we realize that they have added more longs, being 74%, and which is the highest in the previous court reports. And then we had the lowest from the previous dollar index reports. That simply shows EURUSD and dollar index moves in the opposite directions. With that alone gives us that here we realize that EURUSD is been ranging because the percentages are not much more the same. As you can see here, they didn't even change a lot in the longs, but they have been working the shorts. And as you can see here, guys, what we should look for is for the market to give us the footprints. In a way, I'll be looking for the market to go to target the previous week, the Thursday, since this is Tuesday, Monday, Friday's movement. We should look for this area so that the market could give us this move. Now, I hope I gave you a highlight on what I always look for in the market. If you were following my previous analysis, this line became my flip zone from the previous analysis, and look how they give you an entry on the week of 1st September. Meaning, if you were following all my analysis, you could have been into profit. And then how many pips you could have been today with this? You could have made 116 pips. Now keep in mind that we're starting to look for bearish moves, and nothing have changed, guys, from the previous analysis on dollar index. This has been my previous analysis on dollar index. Let me show you, like for real, that dollar index was on my analysis. Here we are, guys. I want you to look into this chart very carefully. If you see dollar index being bullish, just know that EURUSD will be bearish. And on this scenario, we have the very same structure. And then remember that the market hasn't taken out the areas that I was expecting them to take. And then if that's the case, we are having this kind of structure, and I will be going back to my chart. This was the last reaction that we had on dollar index, and then let's see the reality of the chart. This is what we see, guys. And then if I have to take a trade on this pair, or make analysis on this pair, this is what I'll be looking for. We have the first candle, which is this one, and then the second candle and the third candle. We have the flip zone here, and I'll also identify the last flip zone. And what I'm expecting from this market, the market never tested the 50% of this last third candle from the current market movement. And then what I will be expecting is this, guys. Fibonacci retracement on this candle. This is what I'll be looking for, from the high to the low of the candle that I'm talking about, and then we are looking for longs. This is what I'll be expecting from the market. Tomorrow we are having FOMCO. We might be having FOMCO. I haven't checked the market. Let me see. What kind of news do we have to expect? We don't have FOMCO, but I'm expecting a volatility move on Thursday during the 3:30 p.m. US dollar, the core retail sales and retail sales, and then I'll be expecting the market to give us this move. And then it will give us that opportunity to buy. This is what I'll be expecting to see. I hope you enjoyed this video, guys. Hyper Pathway.